Welcome to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Actic and CEO Anders Carlbark and CFO Stephan Ebberyd. The floor is yours.
Thank you, Johan, and thank you, ABG, for having us here. We are looking forward to share with all of you some insights around Actic. My name is Anders Carlbark, and I'm the CEO at Actic since December 2018. And with me today, I also have our CFO, Stephan Ebberyd. He will come in later in the presentation. If we look at the agenda that we will go through today, we have 5 overall points. First of all, we want to share with you our arena, the training, health and fitness arena, and also who we are. We want to share a strategy, and we want to give you a business update. We're going to do a quick summary and then open up for the questions from Johan. First of all, then, our arena and who we are. And these figures that we have on the screen are pre-COVID figures. But the takeaway here is that we operate in the Nordics, we operate in Germany, and both of these markets are forecasted to grow in Nordics with close to 4%, and in Germany, which is the biggest fitness market in Europe, with around 3.4%. Even though Sweden and Norway have a high penetration rate, meaning the amount of gym memberships compared to the population, there's still a forecasted continued growth within these markets. So overall, the arena is growing. If we look at the Actic focus, we are mainly present in medium and small-sized cities. So, for example, in Sweden, we are not in the central of Stockholm, Gothenburg or Malmö, but we have a high density of sites at Uppsala. So our target is to operate in medium and small-sized cities, which means for us a slightly less competitive landscape. We do not see the introductions of boutique concepts, and we're not as influenced by digital aggregators so far. We also, to specify that, in Sweden, target city 4 to 50, which means Uppsala down to Sandviken. And within this, we look at cities that grows equally or more than the country average as total. So we operate in cities that are growing as the market. Moving on to some Actic information. First of all, some numbers. We're going to go more into that later on in the presentation, but rolling 12, we have a yearly turnover of 816 million with a high impact of COVID. COVID has been negative for us throughout the year, and we'll double click a little bit on that in a later stage of the presentation. We have an EBITDA of 271 million, 111 million excluding IFRS 16. We have 177 sites at the moment. And if we look at the business composition, the Nordics, which is then for us Sweden and Norway, are the majority of the turnover. Germany less with 12%. If we look at our product mix, and this is revenue shares, the gym memberships is the main part of our revenues. We have PT, personal training. We operate baths, that's 3%. We have some other revenue as well. And then we have digital, which at the moment stands on 0 and something that we view as a totally untapped possibility for the company. That's the product mix today. I believe it will look different year on year ahead, and I think the digital aspect has a huge potential to grow ahead. Our mission, we have a mission to offer the most convenient and inspirational training arena in medium and small size cities. Convenience, because that's the number one most important thing when choosing your gym, convenience, being close to your gym, and that the gym and the training is convenient. That goes for placement of site. It also goes for opening hours. It also goes for how you operate your digital product and open up for convenience. So convenience is a huge important component when we look at the business logic of the fitness arena. Inspirational, because that's how you attract new members. You also build loyalty, and you also want to build an experience at the site so that you get the members to do their training as well. And the medium and small size cities represent our current expansion strategy. With the training arena, we want to highlight that how people now consume training is not only going to the gym. It's at the gym, definitely. It's outdoors, but it could also be at home. It could be at your office, wherever you are. So we want to really broaden the aspect of what and how you consume training with the mentioning of training arena. Our core company values, passion for a healthier society through exercise. That's our vision, and this is really a core strength within our company. We attract and keep a lot of people whose drive is to help other people live more and feel better about themselves and have a more healthy lifestyle. Customer focus, also a strength. I think we are really focused on finding new ways to understand our customer and adapt accordingly. We have performance, constant improvement, growth, and this is something that we have added during the last year to get a more business focus within our whole organization, where passion and customer focus has been there clearly, but performance has not been as clear. So we believe that that's an important part of doing business in this area. And then we also have teamwork, something that we believe a lot in, and working together. As we're quite a small company, a small support office, we need to do things together in order to be successful. Quick view at our offer. We split that in three. Indoor offer, that represents gym and also the baths that we operate. And that's the main part of where our members are training. We have outdoor, which is a growing part of our business, and something that we have done a lot of tests in to move the needle further. Here we want to really take a position to be best in the market at outdoor training. And then we have digital, which mentioned today is at 0%, but a huge opportunity going forward, seeing how members now consume training. Quick look at our history. We have a history of M&As, and we have a history of growth through M&As. Some has been really good, some has been not as good. And here, if we look at also our greenfield expansion and new sites, they have also been of varied quality. We've been slightly opportunistic, and what we have done here is to set up to be a lot more strategic and really work more strategic with a roadmap expansion going ahead. We have hired a expansion manager coming from H&M, who has run the expansion for H&M in Sweden for 5 years, is now part of our organization and running and setting the targets for how we would expand going forward. That's quickly an overview of who we are. Here you can see our financial targets as they stand today. They have not been changed. We have a growth ambition, and as you could see, we have had a growth over the last couple of years. And our mission is to grow 5% organically and with additional growth from acquisitions. So we still continue to look at acquisitions, but also focusing on the organic growth. Obviously, 2020 is a strange year in many ways, and therefore, of course, 21, depending on the recovery, this would look different, but it's all depending on when we're able to operate under normal circumstances again. Margin aim is 20% EBITDA, excluding IFRS 16 in the mid-term. This has been one of the challenges for the company to live up to, and we have really put a lot of effort into increasing our margin baseline. We saw that when we were able to do a comeback in Q3, that we were able to perform on these levels, even though we lost revenue. So our definite aim is when we go back to normal, we're able to build back our member base. This is still a relevant target for the profitability of the company. Capital structure, if we look at net debt to adjusted EBITDA, if we go back again to the Q3, we had a net debt ratio of 3.1. But obviously also that will be influenced depending on how the pandemic develops ahead. We also have the dividend policy as it stands over there. That's our financial targets today. We wanted to mention quickly the cost structure and how we've been working on that. If we look at the sold membership to start with, we have a quite high gross margin on another sold membership because it doesn't really drive any additional cost, maybe some additional rent, but it does not drive hours. It does not drive any cost of goods. So we have a high gross margin on each sold membership. Going into this, rents, we have a semi-variable rents. We have a flexibility in a large share of revenue-based rents. That of course helps us to be flexible when it comes to tougher times, but also when it's better times, there is part of our portfolio that's also fixed, which will help us to drive profit up. Personnel costs is where we have seen the biggest upside in optimizing our efficiency. We have looked at a lot of other industries. We have done a lot of benchmarks, and we have reworked all schedules in all sites. We have this Monday released a press statement that we are optimizing our staffing. This is the last step in this progress so that we are set up to operate on a much more efficient terms than what we have done historically. So this is a big change for the company. We have also seen that with this efficiency, we can sell as many memberships, if not more. So it's not that we then scale down on customer experience or sales with higher efficiency. It's purely a profit driver. Other thing that I want to mention is that we have central costs, support costs. It's also where we have done a lot of changes. We have changed a large share of the support team to be able to work more digitally and to be able to set up for physical growth. So here we have worked a lot with reallocating costs and really set up a support office that is able to scale when we go ahead, and then when we start to drive growth again, that we can scale this and the share of costs will go down. Next slide, please. Quick look at our strategy. We start with the Jim Collins good to great hedgehog concept. This was one of the things that we started out with when what's the core of what's Actic in terms of the strategic aspect. So again, if you start to the bottom right of the screen, a healthier society through exercise, that's our vision. That's what I found coming into the company. It's really a core strength. We have a lot of employees that work in this industry at Actic because they can make a true difference in people's lives. That channeled in the right way, I think, is a fantastic strength for the company, but it has to be channeled in the right way and not all over the place. But it's a great start and a building stone. If we go to the top of this ring, I think we as said, are what we can be the best in the world at. We believe we can be the best in the world at offering the most convenient and inspiring training arena with what we have said before, and that's our aim, and that's also our ambition within this. What drives our economical engine? Our main economic engine is driven by the memberships, which gives us a strong cash flow and a great opportunity to continue to invest ahead. Those are the three aspects of our overall strategy. If we move on, a quick look at this one. We can say that market trends are maybe not currently so attractive given the COVID situation. But if we look before and if we look at the communication now, is that a healthier life will be even more relevant and more important, and training as part of that is clearly a key in order for people to grow. We see active lifestyle. We do see a lot of people that wants to go and train, or even though with all these restrictions, and we see that from students to seniors. So it's really broad mass of different people that wants to train. We also see digitalization being something that grows quickly ahead and something that we have been investing in and want to be on top of. Other than that, our platform for growth, which is the organization chart, we have changed and reallocated costs to our organization to be ready to grow. Down to the left, we've mentioned that a couple of times. We have a historic of growth, we have an ambition to grow, and we have an attractive cash generation. Last year and end of last year and this year has been to truly change and set up in a different way. And to the bottom right, we are the market leader in many of the small and medium-sized cities with our number of clubs. Continuing quickly with the overall, and I'm going to mention a few points here on these 4 different blocks. The geographical strategy is the omni strategy. So we believe in having multiple sites and the training arena in the cities where we operate. So if we take a city, we want to have a destination site, a larger one, preferably with a bath. And then we want to have a couple of other standalone gyms at home locations are stronger now than before, and at work locations. And the key here in the geographical aspect is to match the potential of number of members to the location and space. That's the core driver of profit at the site, to set up with the right location, but also the right space. And I think this is something we have been very good at before. When it comes to our product offer, what I want to highlight here is that we have an ambition to be the best. And we have recruited a team within training that are the best in these markets which we operate. And we believe that the digital aspect of training opens up for a lot of interesting new sources of revenue, such as PT Online. Corporate sales, now having a lot of people working from home. We do not want to gather all of them in a group X, but rather activate them where they are. And we also see the potential of premium training programs as such. Operations excellence, here I want to highlight that we've worked a lot to make sure that we utilize the strength of our chain and operate with high efficiency. And that has given us a better cost baseline. For our brand, we have an ambition to move out of and break out of the category and stand out and build a lifestyle brand within health and exercise going forward as well. Next slide, please. Quick business update. And as a first part, we were hit by the first wave of COVID. Now we're hit by the second wave. This is in Germany, we have all sites closed. In Norway, we have some sites closed. But the development in Sweden is that we're open, as are the majority of all other operators. But of course, we are heavily impacted by lower traffic based on the governmental recommendation not to visit gyms. And that has impacted our sales in a negative way. And that's why we have communicated that we believe it will be a really tough quarter sales-wise. But I'm also confident that we have a quick recovery when the restrictions are lifted. Other than that, I've mentioned some of the customer trends, but really what has happened, it has accelerated outdoor and digital and at home locations has really changed during COVID, and something we believe ahead as well. What we do here, I think we continue to invest digitally in outdoor. We believe that's where we can move the needle the most. And we will release a new training app next week, which we're really proud of. We think that that's the start of our digitalization. We will also move forward with more outdoor boxes, something that we have tested that has been a complete success. We will also move forward with that during Q2 in next year. Moving on. Some financial highlights from Stephan.
Yeah, thank you. I'm not going to repeat what Anders just have said, but what you see here is the rolling 12 numbers compared to the full year 2019 figures. The key takeaways here is that the sales is highly affected by COVID. As you can see, we have a big drop in sales. However, we have worked a lot with cost control, and hence we have EBITDA that are in line with 2019, and increased margin up to 14% before effects of IFRS 16. Regarding the cash flow, as you can see, we have a high cash conversion. And the cash flow amounts to 102 million compared to -45 million last year. And hence we have increased our net debt to 3.1. So that's mainly the key takeaway. Back to you, Anders.
Thank you, Stephan. Managing time as well. So we move on here. We're summing up then. What we want to highlight as main takeaways is second wave of COVID creates turbulence. Closed markets, but also the recommendation not to visit gyms in Sweden. It's challenging, but we showed in Q3 that when the restrictions are lifted, we will be quick to have a strong comeback, and we can create results quite quickly after that. But we need to get through a challenging period. We have focused on operations excellence and cost efficiency a lot during 2019. So going into this year, we are confident that we have our house back in order, and we have a significantly stronger margin baseline. We showed that in Q1, that the first 2 months were strong. We showed that in Q3 as well. And our main headline here is that we have set up for growth now. We believe that we have a flow in our organization that enables growth, which we did not have before. We believe digitalization. We believe in digitalization, and that drives our development agenda. We, with Actic Anywhere, our product that will be released soon, that will be the base for digital growth. It will be an app, and there are many apps out there helping and guiding through training. We think that this one that we release is really, really good, but it's also just the start. We think that the digitalization of training is super exciting and something that we will and want to be part of driving for the whole industry. And last but not least, we want to highlight WHO's clear statement that was released also last week. Pandemic or not, people must stay active. And this is what we are passionate about and how we navigate this pandemic. We try always to find new ways to make sure that people can stay active, follow the restrictions, but can stay active. And this is what we're passionate about, no matter pandemic or not. But people must stay active. Otherwise, we have huge, more problems ahead than what we have currently. That's it from me and Stephan. Thank you so much for listening. Johan, over to you.
Thank you for that presentation. So a few questions from me. If we start with the average revenue per member and the sort of the building blocks going forward, how do you think we should think about that? What are the dynamics impacting this?
Short term, it's challenging. We have the closed sites, and the whole Germany will obviously drive average revenue per member down because we have zero revenue in these markets. So that's a huge impact. For Sweden, what we have done here is that we have auto-freezed the memberships for everyone that is 70 plus. And if they want to come and train, they're allowed to, but we're really auto-freezed. And that's a large share of member base now taking with zero revenues. It's something that we feel is important to take responsibility. So Q4, it's going to be really tough based on closed sites mainly, but also the freezing some memberships in Sweden. If we look ahead, our ambition is to make sure we build in more value in our membership. So the pure membership, we believe that we have an opportunity to build in value and increase average price slightly. We also believe that PT will grow over time. It's tough to say when because we are losing a lot of trainers currently. We believe that we will need to do campaigns when this is lifted to take back members quickly. So that might tick the price down, but not too heavily. But we believe that we will need to be quite aggressive when restrictions are lifted to get members back quickly.
Yeah, so looking at that last part and the sort of marketing spend per new customer, the customer acquisition cost, do you think that will affect margins going forward, given that many will try to sort of win back the customers?
I think that there will be more campaigns than ever in January if the restrictions are lifted then from all competitors. We have seen that they're slightly aggressive. There is a period everyone is quite aggressive and work in this industry. You work quite a lot with heavily discounts under normal circumstances as well. So I believe that we will need to slightly increase marketing. I think that's important to get the members back. I think that should be the priority. But we should also understand that members will come back to the gym most probably where they were last time because convenience is such a driver to the membership. So it's also about targeting right members, finding where they are close to our site and get them back, the members we have lost. So we believe getting the members that we have lost is an easier way, continue to build more membership that will require maybe a little bit more market investments.
Yeah, so a last question from me is about the liquidity position. Are you confident in that given the current situation?
If you look at Q3, we had a cash of 150 million, and above that we have 77 million in available cash in unused credit limits. So I think we have a strong cash position if we look in matter of cash.
Great, thank you very much. With that, our time is up. I thank you, Anders and Stephan, for your presentation. So yeah, thank you very much.
Thank you, Johan, and thanks everyone for listening.
Thank you.
Bye-bye.